I know a man called Jensen who would like that to happen too. Are you suggesting that maybe the top-end chips coming from NVIDIA, maybe they might get what they want? They might be able to sell them into China?
I am skeptical, but I am sure this is going to be part of the deal, and especially when things become transactional. When you look at the TikTok deal, what does President Trump lead with? This is going to be a lot of money for the United States. Whether or not it complies with the explicit instruction of Congress is almost secondary. We've seen with the investments that President Trump has wanted, the fact that NVIDIA is investing a lot in the United States, that gets him on his good side. The fact that they're investing in Intel, that he took a stake in, that gets him on his good side. The more they push, the more likely this moves up to the top of the conversation. And I wouldn't put it past them to be able to get some level of relief, even if it is just not as strict kind of harmonization globally of some of the semi-cap equipment that is currently restricted from the United States going into China. But maybe it's not as restricted coming in from Japan. Maybe it's not as restricted coming in from the Netherlands. That would be a big win for China that they would absolutely love. It might not be the kind of specific chip from NVIDIA, but there's a lot of other nuances to those restrictions that they would love to take.
Interesting. Ed, thank you. Lots to think about. Appreciate it. Ed Mills there of Raymond James, following that blockbuster investment from NVIDIA into Intel is a question we asked yesterday. Does that get NVIDIA and Jensen what he ultimately wants, which is the ability to sell some of these high-end chips into China?
He wants it. China wants it. Maybe it could be a good negotiation tool. What does the U.S. get on the other side? This is such a complicated kind of negotiation, especially because I don't have a good sense of what the ultimate goals are, what the parameters are, what people want the U.S.-China relationship to actually look like.
It's a new era of statecraft coming together in real time. NVIDIA down in the pre-market by about 0.2%. Intel shares seeing their biggest single-day jump since 1987, with NVIDIA agreeing to invest $5 billion for a minority stake in the chip maker. Pierre Ferragut of New Street Research raising its price target on Intel to 32 while maintaining a neutral rating for NVIDIA. They say this: NVIDIA saved the product business. The partnership gives Intel the possibility to regain commercial momentum and play a central role in both the server and the PC markets. Pierre of New Street joins us now for more. Pierre, welcome to the program, sir. It's good to get your thoughts. It's good for Intel. What does NVIDIA get out of it?
Yeah, it's a good question. NVIDIA gets a lot of positive elements out of these partnerships. First, they build goodwill with the US administration, making Intel like a strong player in the global tech ecosystem is a priority for the administration, making the company, like one of the best assets we have to maintain leading edge manufacturing in the US. Then second, very simply, a lot of NVIDIA clients were very keen to be able to have x86 within their giant NVIDIA clusters. So NVIDIA is simply answering a very simple request from these clients. And last but not least, with like the incredibly dominant position NVIDIA has in the data center world, it's always good for NVIDIA to show that they are not abusing their dominant position. And so opening NVLink, partnering with other players, giving access to other CPUs, in their GPU clusters is actually a very good thing to do. And then the downside for NVIDIA is virtually nothing, because as Jensen put it yesterday, it's going to be about either selling ARM CPUs they purchased from TSMC or selling x86 CPUs they purchased from Intel.
Pierre, how much is this about the cooperation in developing chips and GPUs, and how much is this about the actual foundry? And this is sort of a distinction I'm not clear on.
Yeah, so the answer is actually very straightforward. Today, there is absolutely nothing about the foundry business. We don't even know whether these chips are going to be manufactured at Intel or at TSMC in reality. It's still an open-ended question. Remember, Intel is a very important client to TSMC. So anything about foundry would be like the second act or the part two of the turnaround effort of the new incoming CEO. And today, there is nothing about it. It's all about being able to put an x86 Intel chip within the scale-up fabric, like this very high-speed interconnectivity between chips that NVIDIA has developed.
The way that we've been talking about it, the way that I've been thinking about it is that the U.S. is taking a stake in Intel and maybe pushing others to do the same because of the self-reliance, or the future self-reliance or the hope of it on making chips in the United States. Is that the wrong story? Is that actually not the hopes and dreams of Intel? It's just survival to fight another day?
I think you're actually right, but it's both. So Libutan, the new CEO, has a very clearly laid out plan, and he has like a list of, I think, 10 priorities. One of these priorities is regain leadership in his product business. And that deal is really about that. And it's very important. Without leadership in their product business, it's going to be very difficult for Intel to be successful anywhere else. And one of these other priorities is about strengthening his balance sheet. His predecessor has been on a spending spree, investing a lot in manufacturing capacity. Now for Libutan, it's time to rebuild the balance sheet. So the combination of attracting the US government, SoftBank, NVIDIA, and potentially others onto the balance sheet with cash injections is very important to Intel overall. And of course, Intel being strong, having a strong balance sheet and having a strong product business is critical to increase the chances for Intel to be successful as a manufacturer. So all that actually holds together. There isn't like a foundry versus product story for Intel. Intel has to restore both ends of the business.
Right. Well, meantime, let's delve deeper into Intel. Yesterday it was a big winner. Today, not so much. Citi today, not buying all the hype, downgrading the stock to a sell from a neutral today. They see a limited impact from the partnership and say Intel's foundry business has minimal chances to succeed. Joining us now is the analyst behind that call, Chris Danley, senior semiconductor analyst at Citi Research. Chris, great to have you with us.
Thanks for having me.
So you're totally not buying the hype. Why would NVIDIA get behind an Intel if they didn't think that Intel was, a solid company?
Yeah, great question. So obviously there's a lot of political pressure going on with various parts of the market right now. I think that has to be somewhat of a factor. But as far as NVIDIA goes, it's no skin off their back. So they gave Intel $5 billion. They're down to their last $67 billion in cash. I don't think that's a big deal. They already have some products called Grace that offer an ARM core. So now they're offering an Intel core with that. And then they're going to, sort of loan their graphics capabilities out to Intel to let Intel integrate the graphics in their own laptop chip. So for us, the $5 billion is no big deal. Intel is still behind AMD in terms of processors. And if you have a better graphics chip, it doesn't necessarily help the actual core processor. And then on the, sort of AI product offering, that might end up being, $500 million, $1 billion, maybe $2 billion at best to Intel. But that's years out. And Intel's a $53 billion company. So again, not enough to move the needle. And more importantly, we think this continues to keep Intel in this perpetually money-losing foundry business, which we think they should get out of. And if they did get out of that, i.e. making chips for other companies, we think that unlocks $1 to $2 in earnings power, and we're loving that. But this sounds like this is just going to keep them in this like perpetual cycle of trying to make chips for other companies.
So you don't think that Intel could possibly give up the foundry business at this point because of this partnership with NVIDIA? Does that preclude them from that, or could that still be a path down the road? And is that the only way you'll get back to a neutral, at the very least, on Intel?
Yeah, great question. Well, obviously, if the stock goes down, I go back to neutral.
Right.
That's number one. Number two is I want to make two important sort of clarifications there. So Intel does foundry for their own processors, and we definitely think they should stick in that. They've managed to make a lot of progress there over the last 2 to 3 years, but it's this making chips for other companies, especially for leading edge. They've been trying to do this for 10, 20 years. They are no closer now than they were 5 years ago, 10 years ago, 15 years ago. They're still 2 to 3 years behind Taiwan Semi. They're losing billions of dollars in this. Yes, it's possible that they could do it, and we've outlined that. I mean, first of all, you probably want to hire like 2 to 3 Michael Jordans from Taiwan Semi to come and, teach you how to do the foundry business. Intel has not done that. They have like a non-foundry person running the business. And the foundry business is almost antithetical to what made Intel great, right? Like what made Intel great was manufacturing their own chips. It's a single processor for Intel. It's not taking somebody else's recipe and making it yourself. So you just have to completely turn the company around. And we just think that's not their forte. So if this, keeps them in the business, and based on the feedback that I received, if you heard the conference call with Intel and NVIDIA yesterday, like a third of the investor questions were on, is this going to be a foundry deal? Are you going to get a foundry deal? I mean, I hear it every day. I just think that they're still, kind of running down that rat hole.
Chris, if you feel the market, in the knee-jerk reaction, got a little overexcited about this with the run in Intel shares, what about the secondary responses? In other words, I think the initial reflex was that maybe it's net negative for AMD or ARM or other players that maybe seem like they were less central to the overall story.
Yeah, so clearly it caused AMD to sell off, caused ARM to sell off. And ARM is the only provider of the core processors for the Grace product, which is where, and they talked about this on the conference call, which is where they're going to be inserting Intel. Our ARM analyst says that's not material to ARM, but you might see some share loss there. On the AMD side, I think this is Mortal Kombat between NVIDIA and AMD, and whatever NVIDIA can do to make their product offering better versus AMD, even though AMD has a very small slice of the AI market, they're going to do it. At the end of the day, we think that if AMD can get 10% of the AI processor market, I mean, that's a pretty good deal for AMD. So I think that the bottom line is there's so much money and so much growth that'll be going into the AI market that there's plenty of room for NVIDIA, for AMD, for Broadcom, for all three of those leading companies to make plenty of money. I haven't seen anything like this since the internet days of 98, 99, 2000. And there's good comparisons and eventually bad comparisons to that.
Do you think, Chris, NVIDIA is actively looking for other partnerships out there?
I don't think so. I think that, some of this was obviously, name me a tech CEO that wants to get in their jet every month, fly out to Washington, D.C. and explain themselves and grovel and have to deal with this stuff. So I don't blame them for that. And at the end of the day, it's not a big deal for NVIDIA to just, okay, we're going to offer Intel products as well. I mean, Intel is not a real competitor for us. And we're going to give them $5 billion. That's whatever, 7% of our cash, and we're already getting a good return on that. I don't know if they're going to do other deals with other companies. I just think that this was, it's kind of a risk-reward win-win for them.
We're starting to see some tangible evidence that artificial intelligence can genuinely raise numbers for companies, and it's a welcome change. For the longest time, I've heard endless gripes about AI, specifically the fact that NVIDIA, which makes the chips AI runs on, has been the only company making real money from the theme. It's a great way for NVIDIA to make a fortune, but we haven't seen much evidence of anyone else benefiting from it. Now, I think that there's some truth to that, at least when it comes to the giant hyperscalers, the Metas, OpenAIs, Alphabets, that are spending tens of billions of dollars to take the mantle as the top chat bot. If you can become the top dog, you might become to the chatbots what Google is to search, means everything else is Bing, which would also mean all the AI spending was a terrible waste of money for the losers. Basically, we have an AI arms race. And in arms race, you only really want to own the arms dealers. But we finally have some companies that I've been able to use, that I've really been able to, kick the tires and say, you know what? They are making money with AI. They are creating, let's say, in the case of FedEx, we saw them create patterns of goods, and where they're shipped, they can be gamed correctly. And that saved FedEx a lot of money that it told you about last time when it reported. They're putting up superior numbers, especially on cost, because of the pattern recognition. AI is working for them, and it's making their workplaces a lot more efficient. That's how you can make a lot more money without a lot more volume. When I talked to Tim Cook this morning, the CEO of Apple, reminded me that the iPhone 17 is full of AI, including Center Stage. Oh, man, this great new feature is for selfies, which ensures that everyone in the picture gets in the picture. It doesn't cut off my eldest My eldest daughter, she's got real long arms. We call her Cece Long Arms because she's always the designated selfie taker. As fewer people are cut out of her selfies than me, where it's like you got mostly half people. Being able to do that automatically with software and not get anybody cut out, wow. That's worth a serious upgrade. Tim tells me it's generating a lot of interest. He and I both love taking selfies. This new camera is pure dynamite. Next month, when Salesforce throws its Dreamforce conference, the company is going to show you real artificial intelligence use cases, many of which have augmented sales and earnings for their clients. Boy, I can't wait to see that. Mark Benioff's Agentic's portfolio, basically bots that interact with humans, is growing by leaps and bounds. The analysts have adopted a rap that Salesforce's older businesses are no longer growing the way they used to. Now, I don't see that happening. I do want to see some accelerated growth from this particular Agentic's portfolio, though. Yeah, but then I've been thinking, and I'm saying this is Jeff Marks, my partner for the Travel Trust. I said, after the stock's severe decline, Salesforce is down 26% this year. Maybe we don't even need to see turbocharged growth from Agentics. We may be near the levels where the growth of the Agentics business can soon make up for whatever they've lost from traditional cloud software, if they've really lost anything. Hey, speaking of Agentics, there's no doubt that CrowdStrike's cybersecurity business is crushing it because the AI agents can't be trusted not to be hacked. The North Koreans are going hard against the AI agents. They even have a game plan that includes applying for and getting jobs at companies that hire remotely. One was hired. That's right. One of these bots from North Korea was hired and performed at such a high level that his superior wanted to keep him. But alas, he was a spy. I keep hearing that AI is doing a great job in the banking and brokerage business. I don't know. We just can't see it yet in the efficiency numbers that they publish quarterly. Same goes for the companies that serve them, especially the accountants and lawyers. They're private entities, very hard to gauge. I know that there are AI programs out there that digitize and automate what people do at banks, but banks seem loath to say which jobs are being wiped out. That said, I think these professions are reluctant to use the services of AI too greatly because of the mistake factor. Even after all we talked about it for the last couple of years, there are just too many mistakes still being made by the chatbots, and you really can't afford to screw up like that if you're working as an accountant or a lawyer. To rely on them now before they have reasoning powers, that seems ill-advised. But not for long, because the next generation arms dealer, NVIDIA, has products that have the capability that I think will exceed the capability of a thinking person. It's finally going to happen. You're going to trust the machine over the human. As long as there's no reasoning, the mistakes mean that it's too hard to rely on these bots for anything serious. But once that next generation chips comes out next year, it's all going to change. It's coming. So be patient, because it's almost upon us.
All right, I hope you're all doing great today. In this video, I want to recap this past week's NVIDIA news because a lot happened this week. So early in the week, China claimed that NVIDIA broke an anti-monopoly law. And then not long after that, the Financial Times reported that China was banning NVIDIA AI chips. Upon closer inspection, it appears this ban applies to the RTX Pro 6000D chip. As far as I'm aware, this ban does not apply to the H20 or to any potential new Blackwell chip for China. As I said earlier this week, I think both the anti-monopoly news and the ban are just more of the back and forth trade dispute between the US and China. I also wonder if China is trying to get the US to allow a better chip into China than the H20. And the timing of this news was interesting given that Trump and Xi were scheduled to have a phone call with each other later in the week. Again, I think this whole situation is just part of the larger US-China trade dispute, and I think it will eventually be worked out. The good news is that NVIDIA's business is accelerating even without any China H20 revenue, and they zeroed out any China revenue from their guidance. As a result, any China H20 revenue would be viewed by market participants as additional upside. And at the same time, a lack of China revenue does not derail the long-term thesis either. In other news this past week, NVIDIA, along with other US tech companies, announced large AI investments in the UK. Let me quickly recap some of those announcements in case you missed it. NVIDIA announced in a press release that they are partnering with Nscale to scale up 300,000 NVIDIA Grace Blackwell GPUs worldwide with up to 60,000 GPUs in the UK. NVIDIA, along with partners, including Nscale and CoreWeave, will invest up to $15 billion in UKI factories with up to 120,000 NVIDIA Blackwell GPUs to power initiatives, such as OpenAI Stargate UK. NVIDIA also announced teaming up with Oxford Quantum Circuits to build a quantum GPU AI supercomputing center. NVIDIA and Tech UK are also launching an R&D hub to accelerate the nation's AI and robotics ecosystem. In that same press release, NVIDIA said Stargate UK will feature Blackwell Ultra GPUs operating in Nscale's UK data centers by 2026. Nscale and Microsoft also announced plans to build the UK's most powerful supercomputer with more than 24,000 NVIDIA Grace Blackwell Ultra GPUs. CoreWeave also announced that they will establish an advanced advanced data center in Scotland with Grace Blackwell Ultra GPUs. And we were also told that many AI robotics companies in the United Kingdom are utilizing NVIDIA's products and software as they work to advance physical AI. All of that to say that this is a very large, multi-pronged AI investment in the UK, and it is very good news for NVIDIA as their products are involved throughout this massive AI initiative involving all of these tech companies. Later in the week, we also learned that NVIDIA is investing £2 billion, so about $2.7 billion in AI startups in the UK to catalyze the UK's AI startup ecosystem. And then we got even more NVIDIA news when NVIDIA announced a $5 billion investment into Intel and a partnership with Intel to develop multiple generations of data center and PC products. My initial assumption was that the president probably pushed Jensen to make the investment, given that the FT reported on Wednesday that Jensen would be speaking with the president that evening, the evening right before the deal was announced. But then during a press conference, Jensen said that the administration is not involved in this partnership. And so it appears that this partnership between NVIDIA and Intel is something that's been in the works for some time now. I'm going to rapid fire multiple important points from the press conference. Jensen said that NVIDIA is becoming a major customer of Intel server CPUs. He said NVIDIA is still evaluating Intel's foundry business. Jensen clarified that this partnership with Intel is focused on new custom chips. Jensen said that this partnership with Intel addresses a $25 to $50 billion market. And Jensen said that the ARM roadmap will continue. And so when it comes to CPUs in the data center, it appears that NVIDIA is working with Intel to provide greater optionality to clients. Intel is not meant to replace ARM, but rather to offer an additional option to NVIDIA's customers. Overall, I think this partnership is good for both companies. It is obviously very good for Intel, but I do think NVIDIA stands to benefit from as well. Jensen said during the press conference that he believes the return on the Intel investment will be fantastic. Intel should also give NVIDIA greater access to consumer and enterprise. And so again, I do think NVIDIA benefits from this partnership as well. Also on Thursday, it was reported that NVIDIA spent $900 million to hire Infabrica CEO along with other employees and license the company's technology. Why is this important? Infabrica says its technology can connect more than 100,000 GPUs together. This is a very big deal. The ability to connect large numbers of GPUs together is critical in providing greater performance from one generation to the next. A lot of the performance gains in NVIDIA's newer systems is thanks to innovation in networking technology. And so again, this is a very big deal. Now let me quickly cover 3 different time horizons for NVIDIA: the medium term, the next few years, and then the long term beyond that. As for the medium term, I really like the setup for NVIDIA through the remainder of this year into 2026 for multiple reasons. We should see revenue from certain large-scale sovereign AI deals start to show up either in revenue or revenue guidance on NVIDIA's Q3 or Q4 reports. We also have Blackwell Ultra ramping very quickly right now, which is leading to revenue growth acceleration. And I'm also expecting a surge in compute demand fueled by agentic AI that extends well into 2026. Jensen appears to agree with this thesis, as he said on NVIDIA's recent earnings call that he expects reasoning agentic AI to be a major growth driver in 2026. So that's my medium-term view of the situation. Now, let's extend the time horizon out even further. Production is going well with Blackwell Ultra, as I mentioned. Rubin is on track to launch in 2026. Then we're expecting Rubin CPX at the end of 2026. Then we're expecting Rubin Ultra in 2027, and then Feynman after that in 2028. We have a clear data center product roadmap extending into 2028. And Jensen believes there will be growing AI demand and an expanding total addressable market during this time, as he is expecting $3 to $4 trillion of global AI factory build-out between now and 2030. All right, so I've shared what I'm seeing in the medium term, as well as what I'm watching over the next few years. And now, let's extend the time horizon out even further, because I think NVIDIA has multiple large-scale, long-term growth opportunities that are not being adequately factored into most analyst estimates. Let's focus on physical AI and quantum computing. NVIDIA is establishing themselves as the underlying foundation of both of these emerging industries. When it comes to physical AI, NVIDIA sells the hardware in the data center where the models are trained. They offer NVIDIA Omniverse where the models are taught, tested, and their skills validated. And they also offer NVIDIA AGX, which enables real-time, on-device inference. NVIDIA expects the world to eventually be filled with 100 million self-driving cars, billions of robots, millions of factories, and hundreds of thousands of warehouses utilizing physical AI. And NVIDIA is positioning themselves to be the indispensable foundation underpinning all of it. I am completely serious when I say that I think NVIDIA's physical AI business may eventually be larger than their current data center business. And that's crazy to think about. Most analysts are not factoring this into their models right now. And then we also have quantum computing. Jensen told us earlier this year that NVIDIA is already working with just about everyone in the quantum industry on NVIDIA's CUDA-Q platform. Jensen said that just as NVIDIA used their GPUs to speed up CPUs, they are now going to do the same with QPUs. Jensen Jensen told us the next generation supercomputers will have a QPU assigned with QPUs connected to GPUs. NVIDIA is going to play a crucial role in the future of quantum computing. And again, this is another massive long-term growth opportunity that most analysts are not factoring into their current estimates. And we haven't even mentioned NVIDIA's massive opportunities in bringing AI to the world's enterprise IT, which Jensen believes is an opportunity worth hundreds of billions of dollars, and providing compute to the world's many AI-native startups. These are also massive long-term growth opportunities that I don't think most analysts are adequately factoring into their current estimates. I genuinely think that NVIDIA still has a lot of runway ahead of it. I don't think this story is anywhere near finished. I don't think we are anywhere near a bubble-bursting type of event, as this AI revolution is fundamentally different from the dot-com era in multiple key areas, as I've discussed in previous videos. The truth is that NVIDIA has the earnings growth and future projected growth to more than justify its current valuation. I think there's still a lot of runway ahead, and I seriously think that NVIDIA is going to be worth substantially more in future years than it is today. At least that's my view of the situation. Remember to stay calm in this market. Remember to maintain a long-term perspective, and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.